And we are live. Guys, look, don't buy a home in Denver until you see what the data is actually telling us. And in today's video, we're going to break that down because right now, 3 out of 4 homes are selling below asking. Inventory has dropped nearly 15% in just a few weeks, and buyers have far more leverage than the headlines are suggesting. Guys, in today's Denver market update, you're going to know exactly what you need to in order to put you in a position of power when it comes to buying a home. But if you don't know these things, then it will likely lead you to potentially leaving tens of thousands of dollars on the table when you go to negotiate on the next home you are purchasing. And guys, at the end, I'm going to give you just a little secret as to how to find the best deals out there in today's market, even in the springtime when the market historically ramps up. And so how we're going to do this video is I'm going to share my screen here and I'm going to bring you guys to the market pulse. We have this prepared for you with some of the best data insights you can get. You can't get anywhere else. I'm telling you that this is a website that's not publicly available, and we're going to give it to you in a way that is easy to understand, digest, and ultimately for you to be able to do something with. So let's dive in. The Denver market is quietly tightening on the supply side while prices continue to underperform the long-term trend. Inventory has fallen for several weeks in a row. Weekly contracts remain solid, and in most recent week, there were actually more homes going under contract than new listings coming to market. Sellers, this is great for you. Buyers, quite frankly, this isn't a bad sign either for you. You already have a lot of leverage in this market, and so even if we get a little bit of movement that is more beneficial to sellers, it's actually good for you. You want home prices to go up. You just want to buy at the bottom. And I'm going to tell you a little bit more about the bottom here as we go along. So this doesn't mean that sellers are back in control. Average median prices are still tracking 4 to 7% below their trend lines. Nearly 3 out of 4 homes are selling below their original list price, and days on market are running roughly 2+ weeks slower than normal. Buyers still have leverage, just in a cleaner, more orderly environment than earlier in the year. And so if we look at days on market, guys, I like showing these graphs because it's so easy to see. And let me just share you guys. I'm going to just share my full screen here, so that way, as I skip around, you guys can follow me. So we'll go to this graph right here, and this is the list to contract days on market by week. You can see the previous 5 years here, but what we're staring at is right here in 2025. Oddly, we had a really stark drop here from 65 days on market to 55 in week 48. It's likely some error in the data here. It's very odd that were to happen, but we will track trends every single week on this channel, and that's why we want to encourage you guys to subscribe so that you don't miss the market when it shifts. Guys, I'm telling you, as big as the real estate market is, it shifts weekly, daily, monthly. And so, but what we're seeing here is you see this gap of days on market from 2024 to 2025. And just 2 weeks ago, 65 days on market as opposed to about 56 days on market in 2024. Now, let's look at supply snapshot. Active inventory has been trending down consistently. We were at 12,600 listings in week 41 to week 47. We're at 10,700. A drop of 1,900 homes in 6 weeks, guys. That's a roughly 15% decline in inventory. Now, this is good for sellers because that means there's less homes out there for buyers to look at and purchase. For buyers, ultimately, you want more homes out there that sellers are competing with because it gives you all of the leverage. And so if we just go to our inventory chart here, we can see this inventory closing in on the inventory levels of 2024. But overall, buyers, hint, this is really good for you regardless. If you were down here, we were back in 2023, 22, 2020. This is where prices were elevated, appreciating. You had no control or leverage in the market. And so you can see we're quite far from that. And so even with a little bit of a decline, you're still in really, really good shape. Now, what's driving the slowdown in inventory? Seasonal slowdowns. We always see this. You could see it from the graphs. It typically downtrends going into these holiday months. Healthy contract and closing activity. Buyers are out there buying. You would be surprised, even though they are, you still have a lot of leverage as a buyer, likely a mix of withdrawal and expired listings that are waiting for spring. So let's put our thumb on the pulse of demand. Buyer demand remains very, very real, just discipline. Looking at contracts, 781 properties went under contract week 46, where we had a slight decline, but still high overall in week 47. At the same time, new listings flow has stepped down. So we've seen a significant decrease, likely going into that Thanksgiving weekend. People were not putting their house on the market. And if we look at a slightly broader lens through week 45, we see average close per week is 617. Average new listings per week is 880, meaning there's more listings than there are buyers purchasing homes. And that is fairly standard at this type of in this season that we're in the winter months, especially over the last couple of years where inventory has just increased quite a bit. Now we're getting to the bottom here, guys, and we're going to end this. Typically we do a little bit longer videos, but I want to kind of keep this nice, tight, and wrapped for you guys. And by the end, I'm going to tell you guys exactly what you need to know to find the best deals in today's market. Now, when we look at price movement, we look at average sold price November 2025, 712. Average trend price, I'm sorry, top line prices remain stable at a glance. We look at the average versus medium, you're at 712 to 585, but the trend lines tell the real story. Average price trend line, average is 748. Actual is roughly about $36,000 below trend, about 5% under. And this is about 7% under when we're looking at the median price. So while it doesn't feel like a price crash, the market is very clearly pricing below the curve. And guys, this is why it's one of the best times to buy that we've seen over the last 5 years. Now, best time to buy in terms of affordability with rates being high, not so much, but in terms of the price of the home, we are seeing incredible deals out there. And this is just proof in the pudding so that you guys know we're not just talking fluff. We're giving you guys real actual insights, not just boots off the ground from my perspective, but also what the data is telling us. Now, buyers, you're going to just continue to love this because when we look at seller adjustments, we're looking at average concessions, about $7,500 per contract, meaning sellers are giving you $7,500 in concessions to buy down your rate and closing costs. And so we're not just above historic norms. We're right in line with an elevated concession trend. And in practice, this means most offers are still coming in with some form of seller paid credit, whether that's for rate buy down, closing cost, or repairs. And guys, when we look at sold price versus original price, this is really, really, really important. If I have any sellers on live with me right now, this is the one you want to be paying attention to, because what we're looking at is what did you enter the market in terms of your original list price, and what did you ultimately sell for? And what we're seeing in the data is 76% of homes sold below their original list price. 12% sold at asking and 12% above asking. So it's very uncommon to sell at or above asking. Those who do likely are pricing well below where they ought to be in order to drive more traffic to their listings. But ultimately, guys, 3 out of 4 sellers are taking less than they originally asked for. Buyers, music to your ears. It is happening. The time is now. Now, time on market reality, sellers. If you're on the market, we're looking at 65 days. Homes are taking about 17 days longer to sell than the underlying trend, roughly 35% slower than we'd consider a balanced pace. So what this means on the ground is that for sellers, a 50 to 70-day journey from list to contract is very normal in this environment. That's average. That's not to say you could very well be in a situation where your listing's taking 80, 90, 100 days. If you're priced ambitiously or have condition issues, it can easily stretch beyond this 50 to 70-day mark. But we've got some insights for you here shortly. So stick around. And for buyers, guys, you have time to shop. You have time to compare, negotiate, especially on properties that have been sitting a while. Patience is being rewarded in this market. That's why we say it's one of the best opportune markets for buyers, because you don't have to make a decision right there at the house where there's 10 other offers you're competing with. We're long past those markets. You can see a house today, and in all likelihood, next week or even the week after that, and so on, that house will likely still be available, and that's prime for negotiation. So, guys, to summarize this, the takeaway, the Denver market right now is best described as tightening supply, We see the amount of homes for sale decreasing. We've got steady demand. Buyers are still out there, soft prices, and strong buyer leverage. For buyers, you're still in one of the strongest leverage positions we've seen in years. You can negotiate price concessions. You're buying into the market below the curve, not at the top of it. And as inventory thins, rates eventually normalize. This period will look like a quietly excellent entry point in hindsight, meaning that if you guys are buying now, rates decrease, prices are likely to go up, and you're going to look at this time and say, man, I got in at a really good time. Now, I'm not saying that's going to happen. Let's just be real. You got to do your own research and come up with your own analysis and thesis of what rates are going to do. But we do know that when rates come down and homes become more affordable, prices go up. So on, the vice versa is also true. If rates go up, home prices tend to come down. For sellers, you can absolutely get your home sold, and you can sell it well if you price in line with today's reality, not yesterday's peak, present the home at a very high level, and go to market emotionally prepared to negotiate on both price and concessions. Guys, those who adapt quickly to this environment are still winning. Those who hold on to expectations are finding themselves reducing price, offering concessions anyway, and sitting longer than planned. So it's one of those things that, yes, you can do aspirational pricing and test the market and do all the things, but like the writing is on the wall and you can listen to it or not. It's up to you. Reality is, guys, when you're working with the Light Group, we're going to let you choose your list price with professional guidance so that you can make the smartest decision possible. But we're not going to tell you can't list at an aspirational price. We're just going to tell you what to expect when you do so. And a lot of times, guys, if we just read the data and see how the market's reacting to it, it behooves you to just price competitively to begin with, exceptionally prepare your home. And buyers, guys, it is time. If you guys have any questions, reach out to us down below. And we do videos every week on this channel highlighting different areas, new builds. We do the Denver market updates live here on Wednesdays. And so be sure to subscribe. And with that, we